May profits be upon you. I hope you're starting your trading week off on the best foot possible. All right. There was a good gold short today, and I'm hoping that you got some of that. All right. If you didn't know how to enter, that is the purpose of this video. All right. I'm hoping that it helps you to learn how to best squeeze some benefits out of my videos and my analysis. And I want to help you with your entries. I want to help you with your TPs. I want to help you with your analysis. This is my attempt to do so. Work with me. All right. Now, when I left you on my video for the gold forecast for this week, I told you it would be, I'm looking for two things. Either price will round over and head to the downside, and I would only enter a short with confirmation, right? And I even gave you a little diagram like this. I said a high, a swing low, a higher high, a breaking of that swing low, and then an entry after a return to impulse. Somewhere in this leg of structure, price will return for that high probability short. All right. That's what I look for all the time. All right. So I also said I'm looking for price to head up for the week. All right. I did not mention FOMC. I mentioned FOMC on Wednesday and all of the videos after this one. This was the first one during the weekend. And I did 4 more after that. And I talked about how the FOMC on Wednesday, that news announcement, when the Fed talks about interest rate hikes for the US dollar, told you the potential of how it'll have a high impact on the week and on the currencies, and how the markets will set up for that day by kind of going the opposite direction, giving institutions that discount price for the eventual longs after Wednesday. Okay. And opposite, with USD lid pairs like USD yen, you're going to see no, actually that's the same as USD yen. Like pound USD or euro USD, you're going to see the exact opposite. You might see some drifting up to get the best price possible for institutions. And then Wednesday, boom, down she goes. Okay. Hope I explained that well. All right. I'm not feeling very well today, so excuse me. Will you? Okay. Now, so this is where we left off. This is prior to the open. All right. I'm going to advance the candles and we're going to see how things go. Boom. All right. This is a 15-minute candle. This is how the market opened. I mentioned that we have a liquidity point here that price would likely go after to do the liquidity hunt. It swept that high and flushed. Now, the first thing I noticed is 2 things. One, the liquidity sweep. I always look for that liquidity sweep. You got to follow that liquidity. All right. Second, the direction and the momentum it took taking it down. Now, what I'm going to do is go down to my 1-minute time frame for my entries. But I'm noticing here the breaking of lows, the taking of liquidity, the running of the sell side liquidity. That's what I'm noticing. All right. You have to notice that momentum of this candle. All right. The momentum is strong to the downside. And you see that we successfully swept the highs and now we're sweeping the lows. Right. So that's what I got my eye on. Now I go down to the 1-minute. Boom. And what do I see? All right. First, I don't know why I have to move these things over. That is the magic of trading view, right? I'm kind of got a little bit of OCD. All right, so on the 1-minute, these short-term lows here are what stand out to me. Price broke that short-term low here. Boom, right? Let's get this one break. All right, and then another one here. All right. Oh man, I got this one wrong. All right, let's do it here. That's pretty good. All right. So we broke two short-term lows. We broke that one, broke that one. You see how price pivoted here, right? With a inverted head and shoulders, boom, boom, boom. This is when it breaks that low. That for me, that's pretty significant, and it's only responding to this one. And we broke through all of that. This is a lot of momentum, folks. So what we have is the first part of the my entry. High, a high is made, a swing low, a higher high is made, breaking that high, and then a momentum carrying impulse to the downside, breaking this swing low. All right. And what am I waiting for? A return to impulse in this leg of structure here. All right. All right. And that would be the filling of an imbalance and rejecting off of the impulsing order block. All right. To the downside. That's what I'm looking for. This is what I'm looking for right here. What parts do we have here? We have a low, we have a high, we have a swing low, a higher high, breaking that high, and then a flush, breaking these lows, breaking this low, breaking that low. All right. Now I'm waiting for one part, the return to impulse for that high probability short. Follow me so far, right? Good. You're doing good. Price does come back up. All right. But it doesn't come back up into this area, right? What am I looking for? What, how high should I be looking? Look, bring out your fibs. All right. Go from the top of the beginning of the impulse to the bottom of the impulse, right? Let's move this over. All right. And what am I looking for? I'm looking for price to head towards this 50% equilibrium. I like to take shorts. I like to take shorts in this particular instance when price does cover that 50%. This is like a guide to me. It's not a hard and fast rule, but I prefer to take anything a short. The shorts are higher probability and higher risk to reward. Just this is the institutional price. This is their discount prices up here, all right? But it has to be above that 50%. It should be anyway, all right? That's a general rule and guide. But what I'm trying to look for is in this impulse, where is the fair value gap? All right, you see how we have a little separation here, a little separation here. All right, I want to see what that fair value gap looks like. So I'm rifling through the time frames. We got a fair value gap here, right? Price comes up, gives us that fair value gap, gives us the last portion of it, right? We would be looking for price to come between here, the low of the preceding candle before this displacing candle here, before this momentum candle, and then the other side of it, the candle that follows, the top of the candle that follows that candle. So it's the one. This is our momentum candle. This is our displacing impulse candle. You look on the left side where the preceding candle is the low, what the low of that is, and you look on the other side where the high of the candle that follows this candle. All right, this is your fair value gap. This is your imbalance that price will definitely, the market doesn't like to leave imbalanced areas. All right, it'll rebalance that imbalance. All right, and I'm going to go to the 3. I'm going to take a quick look here. All right, you can see the imbalance was down here with this candle, right? But this candle filled it up to a certain point. All right, and if we go down to the 2, we go down to the 2. Yeah, this is where we are. So I'm hoping that price comes back up in this area. And this is, I'm telling you right now, all right, this is where you would put your a pending. I would feel very comfortable putting a pending here and placing your stop loss above the the candle that the impulse candle. All right. Now, again, I look for entries on the 1 because it gives me the best risk to reward, gives me an area where I can pinpoint entries, right? But you want to put your stop loss above that candle. Now, the thing is that I see the impulse here. I see the impulse here. And if I look back at the 15-minute, all right, I'm looking, okay, well, this is the area where the fair value gap starts, okay, right here, all right? So for me, I'm putting my stop loss right above that area because price could come all the way up and fill the whole imbalanced area. It could fill the whole imbalanced area and take me out of my trade, all right? So I'm not necessarily looking for it to come up here. All right. If it does, I'll let it hit my stop loss and I'll look to re-enter in this area. It's no problem. All right. You know, losses come with this. All right. This is, for me, this is a pretty high probability trade. So I'm fine with this entry. You know, it gives me, if it hits my stop loss, that's fine. I'm looking at how price came here and start the buying, and then we had an aggressive selling. So I'm putting my stop loss right above that area. No problem. All right. I don't need a 2-pip stop loss. I don't need it. All right. This is fine with me. I'm on the 1 minute here. So I have my stop loss up here. I have it at the beginning of the top of the remaining part of this imbalance, and I would be looking to target lows. All right. Now, this is on the 1 minute time frame. I'm looking over here already, so I'm going to move up to the 5. See what am I seeing here? There's a lot of activity at this level, a lot of activity going on. But is that my target? Should I be? I always target the lows. This is a 5-minute low. All right. So I'm looking at this and I'm going, this imbalance, if it comes back up here, I'll be fine. Let's take this all the way. I don't always go to the tip where the wick is. I like to go to the close of candles. And this is a pivot, a nice pivot for me, a structural low. And if price goes past that, that's fine. That's fine with me. You know, that's okay. But I'm going to look at this area here. I'm looking at this area here. You see all the interactions that we have here. I'm looking at that area here too. So I'll probably take off a good portion here, but I'll have my final TP here. That's the way I would, that's the way I look at taking my TPs. All right. I'll look at where price has the potential to turn around. You see how price acted when it got here. All right. But I always target the lows. All right. So we have 2 TPs here. All right. TP1 here, TP2 here. All right. You can have more TPs if you like. All right. But that's the way I would do it. Okay. So we go back to the 1 minute and we're going to watch this play out. We have our TP. I'm not, again, there's a chance that price would hit this. I would feel really secure if I put my TP up here. I'm not doing that. I'm not doing that. I'll be fine if it hits the stop loss here. I believe that I have some protection here. All right. I always put the stop loss above the candle that is showing the imbalance. All right. We already have half of that imbalance filled. I believe price would come up and take out that high, take out this liquidity here. All right, because I believe this is always an inducement to get people to take shorts early so they market makers could come back and take out that stop loss. All right, so here we go. Let's advance price. Price is coming back up. I'm now in this trade. Now I'm hoping that at this point, I'm being honest with you, I'm hoping that it doesn't hit my stop loss. I'm looking at this structure, boom, swing low here. I'm looking at this structure, boom, swing low here. I'm looking at both of these as protection. all right, as protection, as a buffer to my stop loss, all right? And price just happens to come on down. You know, I'm feeling pretty good about it, all right? And that would be your entry. And I gave you my criteria for that entry, and we can just let it play out. And you see how it comes right back to that entry, right back up to the fair value gap. It came right back up there. All right. Now I want to tell you something. After price comes all the way down here, and I'm glad this happened. It reminds me. Look at this. You're going to ask yourself, and you should, would you still be in this trade? You might be asking me that. Would you still be in this trade if price came back up to your entry? Let me tell you something. All right. On the 1 minute with gold could take you out quick. So I'm always quick to go to break even. Right. I was always willing to do that, depending on how the market is moving. With the open, I'm a little aggressive with my management. Now, what I want you to do is you give yourself, you know, a percentage, you know, a risk to reward a number. You want to say when price reaches 1 to 3, right? Or 1 to 5, I'm going to bring my stop loss to break even, right? Or I'm going to take off my initial investment, my initial risk. All right. If you risk $100, take that $100 off. And leave your stop loss in place so that if price comes back up to your entry, you're not kicked out of the trade. You're giving it room to breathe. And if price hits your stop loss, you're taking out a break even. You already took your initial risk off. You understand? That way you don't have to touch that break even, because you get kicked out of trades and watch price go ahead to your TP. All right. You don't want to do that. All right. Take your initial risk off at 1 to 1, 1 to 3, 1 to 5. You know, do it according to what makes you feel comfortable. All right. And then, you'll still be in the trade. You give your trade room to breathe, and you won't have to watch price leave you and go to your stop loss. Let's continue. All right. I hope that you found that bit of information helpful. All right. Let's continue. You notice how price came right back up to that fair value gap. Again, took out the liquidity of the last high point here, and then continued down. Now, we made some really good gains on this one, right? Really good gains. And if you would have took I want to bring this up too. All right. Now I was aiming towards these lows, right? Remember I told you where was my first TP? Right here. Right. You see how it comes to this area? You know, because you can see how price played in this area with as resistance, comes back, hits support. You know, this is one of those zones. And you know, if you would have took out everything here, that I wouldn't have, you know, been mad at you. All right. And obviously it doesn't look like we have enough oomph to hit those lows here. But if you pay yourself, you make sure you pay yourself, you'll come out of this with some profit, as opposed to letting it do all this and then it comes back up to your stop loss. All right. When you see price start to dither, what I do is I start taking off. I start taking some profit, and I'll move my stop loss to break even plus, and then I'll move it even further. If I see it's having trouble getting back up, it's having trouble going lower, I'm bringing it down. As it makes these lower and lower pullbacks, I'm bringing it down further and further until I'm stopped out. all right? But I'm stopping out in profit. You understand? And this is that would be after I make 1 to 5, 1 to 6 on this trade. All right. I hope that you found this this video helpful with entries, with a little bit of trade management, with learning about confirmation entries. I hope you found it beneficial. If you did, make sure you leave a comment. All right. If you give me some feedback on it, will you? And make sure you give me a like too. All right. If you like what I'm doing, if you want to encourage more of the same, I'll continue to put out videos. Okay. As long as it's helping somebody. Right. And do subscribe and make sure you catch the updates. I will see you in the next video. I hope you enjoyed this one. Thank you for spending a couple of minutes of your day with me. I'll see you in the next one.